I've got 3 stocks to buy that I want to show you. What I do on a regular basis is I break down the ETFs for individual sectors. But in this one, this isn't exactly a sector as much as it is a subsector. We're looking at the housing home builders. These stocks, what I look for when I'm looking for a value investment is, number one, an undervalued stock. But I want to see revenues continually increasing. And of course, we do see some bumps in the road with the economy, generally speaking. But I also want to see continually increasing earnings, but more so continually increasing stock prices. Now, the home builders are on fire. They are really lighting up the board, yet they're still undervalued. And if this economy continues forward with the big skew with what we've got with housing, with supply and demand, anything these home builders build, they're going to be able to get a premium. Because of that, these undervalued stocks are stocks to buy. Let's jump in. If you're just joining me for the first time, thanks so much for stopping by. This is a breakaway channel. I have cannabis stocks analysis, my other channel, my original channel, with about 9,000 followers there. This one I just launched a couple months ago, and it's really growing fast. Thanks so much. You'll want to check out the links down below, dhtayloranalysis.com for my website. You can find the top 50 value investment stocks that I like, where it fits that criteria. Continually increasing revenues, continually increasing earnings, and continually increasing stock price. Now, not all those stocks are buys right now, simply because some of them are a little overvalued and the economy may shift. Interest rates may be moving higher. Given that, let's take a look at what's happening with this, the 30-year fixed mortgage. This is kind of a big story. Now, obviously, things were much lower back in 2021. And if you got, as many people did, refinanced or bought a new home, this really jacked the housing market up significantly. And there's so much going on wrong with supply for housing. But anybody who got that 3.5%, 3.25% mortgage rate, sub 4%, they're not refinancing anytime soon. We had a big spike up, nearly hitting 8% in the mortgage rate. Because of that, the house prices really slowed down. Things are flipping again. With mortgage rates hitting 6.62, not sure if we're going to see too much lower. And so individuals are starting to nibble back in. There's a little more affordability than what there was back in October. Nonetheless, these are still elevated mortgage rates. What will happen next with mortgage rates? First, let's look at the home price index. And as you can see, this is Case Shiller. Shiller, I know, is a professor, and came out with the home price index. I can't remember what Case did. As you can see, these home prices are moving right back upward, all right, because of that small move lower in the mortgage rate. And if mortgages just stay right here, home prices are likely to kind of moderate and kind of just trickle higher and higher and higher. But there's so much wrong with supply right now. You've got all those individuals who mortgaged or refinanced or bought a home, got sub 4%, 3.75%, 4.25%, whatever it might be. They're not touching anything with 6.65% mortgage. But then you also have the baby boomers who own about 22.5% of all homes. They're not leaving. They can't downsize because there's no homes available for them. So all the Gen Zs and the millennials who are adults with kids now can't move up because those millennials can't move down. There's so much going wrong, which means we've got these home builders who are sitting in a really excellent position. This is the thing that I look at that really kind of makes me nervous. Will we see a big spike higher in the year-over-year rate of growth of home prices? We are seeing a move back upward. Will we see 10, 12, 14% again? That could really stall the housing market out. And this is sort of that asterisk you should be looking at. Now let's take a look at some of the stocks I'm looking at. GRBK Stock. This is Green Brick Partners. Now, they're currently at $56. My target on them, $138 for GRBK Stock. Now let's break that down first. There's also SPY stock, which is the S&P 500 Select Sector ETF. That one is the orange. Then we've got XHB, the Homebuilder stock itself, ETF. That one is plus 50% since the very end of 2022. All right, Green Brick Partners, projected revenues. As you can see, they continually increase revenues. These are sort of things I look for that are sort of like the absolutes, if you will. You've got to be able to answer the question, what do you think is going to happen? Now, of course, we have 2023 just finishing up. 2024, we're looking for 1.94 billion for Green Brick Partners. But when you look at this chart, reasonably, we can assume that we're going to continue to see Green Brick Partners increase their revenue year after year after year. They've been doing it for some time. That's one of the things I'm constantly looking for. Earnings per share projections, 2023, $6.30, but we're looking for $6.94, and that's really the key. Okay, so now let's ask the question, $6.94, GRBK stock, what does that break down to? The U.S. 10-year Treasury yield is currently 4.061%. I think it's going to go a little higher, but that's your benchmark. We look at the U.S. 10-year Treasury and we ask the basic question, okay, there's your measuring stick. How does everything compare to that? SPY stock. Now, I take SPY stock, all 500 shares, and I break it down to just one share. I don't put the weighting in. And I ask the question, the next 4 quarters, add those up, divide them over top of the respective stock price. What is the yield given the price and the total earnings? SPY stock, 5.018%. There's still a lot of juice in the tank there. But that doesn't necessarily mean that the SPY is going to go higher. But some stocks are overvalued, probably see some selling there. Some stocks are undervalued, might see some buy on the dips. XHB, that's the Homebuilders Sector ETF, 5.918%, of which GRBK stock is involved. They're looking at $6.94, and if you break that down, you see the current price of about $50, and the yield is at 13.83%. That is significantly undervalued. When we take a look at GRBK stock one more time, I get that target price, taking the $6.94, dividing that over top of the 56, and that gives me the target price of $138. Now, of course, there's lots of asterisks there. What will happen to the mortgage rate? If mortgage rates keep going higher, Green Brick Partners plus a bunch of others are going to have a tough time selling their product. Nonetheless, they'll sell each one at premium, but there's a lot of costs involved. But you can break down, you can see how SPY stock, much lower, XHB itself, there's some inside XHB that are underperformers. GRBK stock is one that has outperformed both those sectors with a lot of upside remaining. Target price 138. Even if we hit 100 on Green Brick Partners, that's huge. Toll Brothers, TOL stock is the symbol. Current 103.35, target 215. Let's break this one down as well. And as you can see, Toll Brothers continually moving higher and higher. This is over the course of the past year, this stock. Toll Brothers projected revenues. Now, 2023 saw a bit of a dip, and 2024 is kind of seeing the same kind of dip. Nonetheless, there's some solidification. 2022 was kind of a banner year for them, so they're kind of just sort of moving sideways a little bit, downward from 2022, but Toll Brothers themselves is still undervalued. Earnings per share, $12.36 in 2023, $12.25 for Toll Brothers 2024 estimated. Let's break everything down. With the $12.26 earnings per share projection, TOL stock price hitting at 101, I'm looking for that big move higher, almost doubling it with a target of to 215. Again, asterisks, what will happen with the economy moving forward? I do see that potentially we see the short-term interest rates moving upward a little bit, potentially in 2024. Mortgage rates, however, that's a 30-year event. Those are probably going to moderate out and stay about where they are. I don't think we're going to see that 8% level this year, although I think we'll probably see some inflation kind of moving back in. I think the Federal Reserve makes a move, but nonetheless, the high end is probably capped. PHM, Pulte Group. PHM stock, current 104.50, target almost doubling that. Projected revenue, again, continually increasing revenues. 2022, 23, and 24, you can see there's a gentle increase higher. Projected earnings per share for Pulte Group, a slight dip for 2024. Nonetheless, 1148 is what I'm looking at. We break this down. The 1148 divided over top of PHM current stock price at 104 gives you a 10.943% yield. When we look at these stocks, you look at that revenue continually increasing more and more as well, with the economy still performing well. I think the Federal Reserve might be forced to raise interest rates slightly in 2024. We may not see a decline till 2025. I never imagined the Federal Reserve gets it right the first time. That they have to kind of balance a little bit there. And I think where they got themselves now, employment numbers, we're starting to see unemployment dip just a little bit. And I don't think we're out of the woods with inflation. At the very least, the Federal Reserve maintains where they are. Mortgage rates kind of mellow out. These three home builders probably going to be moving upward. Make sure to hit the like and follow button. If you're looking for more written content, dhtayloranalysis.com is my website. Link is down below. You can find the top 50 value investment stocks. We'll see you in the next video.